So thanks a ton for speaking to us at ET. Now let me first begin by talking about, we're meeting at the backdrop of having just concluded the IMF and the World Bank meetings, and also at a time when the finance minister, in fact yourself, you did mention that World Bank is constricted in its ability to, provide more capital to the emerging economies. What role do you think the BRICS nations can really play at this point of time in terms of pushing development further?
You see, both the IMF and the World Bank are capital constrained. The 14th quota review of the IMF happened quite belatedly, and the 15th quota review also now is taking time. We have been urging and repeatedly stressing on the need to complete the quota review of IMF. Today, if you see, the IMF is dependent on bilateral resources to continue with its lending, because the normal shareholding based, the quota based funds which they have at their disposal is highly inadequate to meet their financing requirements. Similarly, the governance reforms issues and the capitalization of the World Bank is also something which is under discussion, but we haven't reached any conclusion. Now, at the same time, the World Bank has a strong balance sheet. On the other hand, you have developed countries which have negative interest rates or which have near zero interest rates. There is a lot of funds available in pension funds, in superannuation funds, and there are large funds which are waiting for opportunities to invest. In their own countries, today they will earn practically zero return or perhaps negative return. But there is huge amount of infrastructure and investment appetite in the emerging economies. So the point which I made was that the new development bank, that is the BRICS Bank, can work with the World Bank, utilize the balance sheet of the World Bank to leverage these resources and do funding of infrastructure projects and other projects in the emerging economies. This will achieve two objectives. First objective is that it will provide a reasonable return to these superannuation and pension funds, and number two, this will also meet the requirement of funds for infrastructure and other sector in the developing economies.
So let me also, because we are meeting at the backdrop of the BRICS summit, also help us understand what kind of partnerships are we going to look at. You've yourself met, a lot of delegation from the other countries. What has their response been like, and what are the key areas or the sectors that we could look at?
You see, we are today looking at cooperation with regard to cooperation in the areas of controlling illicit financial flows, checking dealing with issues of profit shifting. Places where incomes and profits are generated, they should be the places where taxation should be imposed. Basically, the issues which are under the umbrella of BEPS, which are already under negotiation. Illicit finance flows is something also again which affects the BRICS countries. We are looking at infrastructure financing from multilateral resources and also the kind of method which I just mentioned about leveraging the balance sheet of World Bank. We are also looking at possibilities of raising domestic, bonds in domestic currencies of each of these countries by the new development bank to do lending for infrastructure and for other projects like renewable energy, etc. We are also discussing about issues which the BRICS countries, they can take up in the G20 forum under the German presidency in 2017.
So, I'm going to focus on 2 points. One on, there is a consensus between BRICS nations about rolling back trade barriers and protectionism. What is India's stance in that, and what is the kind of benefit that India will see from that?
You see, India today is an open economy. So far as FDI is concerned, we are perhaps the most open economy. In trade also, India has moved over the years to a lower taxation regime. But today the world is moving. The advanced countries are becoming, more protectionist, and both Europe, UK, even in US to some extent, the kind of public discourse and the debate which is taking place, the developed countries seem to be moving towards more of protectionism. So we have been actually in various multilateral fora, we have been insisting and urging the developing countries, which all these years were keen that the world should open up and there should be no protectionism. We are appealing to the countries that we should eliminate not only trade barriers, but also barriers in movement of services, in movement of manpower, qualified and technical professionals moving from one country to other country. So there should not be barriers in free flow of services. There should not be barriers in free flow of human resources across countries.
Right. But so, we're also talking about a BRICS rating agency, a rating agency that can particularly look at the BRICS countries. But we're given to understand at this point of time there is some sort of an apprehension by certain countries. But given the fact that you yourself said when you were in the US that the rating agencies should perhaps look at the investors of those countries themselves. So where are the talks with respect to the BRICS ratings agency, and how soon could we really see this rating agency hit the ground running?
No, this is under discussion. The need for a rating agency has emanated from the fact that rating agencies typically in the developed world are several steps behind the reality in the emerging economies. The world is moving fast. Technology is moving fast. Emerging economies are also undertaking new policy measures and reforms at a very fast pace. Advanced economies, particularly the rating agencies based in advanced economies, are perhaps a few steps behind the curve of development in the emerging economies. So there is a need for a new rating agency sponsored by the BRICS countries or by the institutions located in the BRICS countries. But the new rating agency has to be independent, autonomous from government. It should maintain arm's length distance from governments. But these are early days. This is still under discussion. So at this stage, I will not be able to spell out the details.
So
Thank you.
Just two quick questions. So, we've seen inflation, CPI inflation coming in at a 1-year low. Is it safe to say that, we've decisively won the battle against inflation?
No, you cannot say you have won the battle. I mean, it's a continuous process. It's a continuous process, and in a volatile and uncertain world, new developments happen from time to time. What is important is that we remain alert. We always watch the situation, and we should be proactively responsive to the emerging challenges and the situation. Today, the consumer price index, the inflation which has come down, it is on expected lines. And going forward, I think in the future months also, it should be, there is considerable scope for further moderation, or perhaps it will hold at the same level.
Also, the winter session, the dates for the winter session of the Parliament are out, November 16th to December 16th. Is it safe to say that budget will perhaps be now in January itself? Because the government is also talking about advancement, but given the fact that there are assembly elections in 5 states, I mean, how do you really see things at this point of time?
No, I can't say. The budget will come end of January, perhaps in the early part of February, but then depending on the state elections, the government will decide. Thanks,
Atan.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.